Very good day to everyone. So, the mock test paper series 2, August 2024, was recently held, and we are now covering in this video the mock test paper for CA Intermediate Course Taxation exam, and this was held on 20th August 2024. And in this video, we will be discussing the working notes or the full complete solutions, the logic and reasoning behind the answers to various MCQs and case scenarios. We are not going to discuss the same for the descriptive questions because the ICAI provides the solutions or the working notes, working steps for the descriptive questions. But since it does not provide the same for MCQs and case scenarios, it becomes important for us to know what is the logic, what is the reasoning, why a particular answer is correct, and therefore this is the particular objective of this video. I had made a similar video for MTP Series 1 as well, which I had uploaded some time back. So we will be covering MTP Series 2 in this video. So we will first cover income tax law and then we will cover GST. I will not read out the question because you have already attempted the MTP and you are watching this video because you want to understand the reasoning or the logic, the working steps behind the answers to the MCQs and case scenarios. So we will straight away move to question 1, which is Mr. Sambhav. And question 1 says, the first MCQ says, compute the amount of export turnover and total turnover for purpose of computing deduction under section 10AA. And the correct answer is 40 lakh and 80 lakh respectively. So if we look at the question, total sales are 85 lakh and export sales are 45 lakh. Okay, but there is a point which says export sales include freight and insurance of 5 lakh for delivery of goods outside India. Now this needs to be excluded. This needs to be excluded. See in TaxBook Plus, this is a provision for 10AA, and it says export turnover does not include freight, telecommunication charges, or insurance attributable to the delivery of the articles or things outside India. Okay, so export turnover does not include this, and this also needs to be excluded from total turnover. Why? Because what is excluded from the numerator should also be excluded from the denominator. So accordingly, in our question, this 5 lakh needs to be excluded from both 85 lakh and 45 lakh. So the answer will become what? 40 lakh and 80 lakh respectively. Second, compute the amount of deduction available to Mr. Sambhav under section 10AA. So export turnover into, profit into export turnover divided by total turnover. So 20 lakh into 40 lakh divided by 80 lakh. So this basically comes to what? It comes to 10 lakh. But previous year 23-24 is the previous year in question, and this is the 6th year. Starting from which year? Starting from which year? Starting from 2017-18 or 2018-19. Okay, we will begin from 2018-19. Why? Because this is the year in which the manufacturing begins. Year of establishment of the undertaking is not relevant. Year when manufacturing begins is relevant. So this 23-24 is the 6th previous year, and therefore 50% of this, that is 5 lakh, will be the amount of deduction. So 5 lakh is the correct answer. The third MCQ says compute the total income of Mr. Sambhav, and the correct answer is 17,6500. So how has this been arrived at? So PGBP is profit of the undertaking, which is 20 lakh. Okay, 5 lakh is the deduction under section 10AA that we need to give. Rent is 30,000 per month, so 3 lakh 60,000 minus 30% standard deduction, and this comes to 2 lakh 52,000. So we add this 15,000. We add interest on savings bank account and interest on post office savings account of 7,000 minus 3,500 exemption. So 3,500 is what we need to add. So if we add all these, 20 lakh minus 5 lakh, 15 lakh plus 2 lakh 52,000 plus 3,500 plus 15,000 and minus 80 TTA deduction of 10,000. Okay, so this comes to 1760500. ATTTA is allowed because Mr. Sambhav has shifted out of the default tax regime, so optional tax regime applies. So 1760500 is the correct answer. Okay. Second question pertains to Mr. Anshul, and we see what is the first MCQ. The first question is what is Mr. Anshul's residential status, and the correct option is resident but can't determine whether he is ROR or RNOR from the given information. So what is the information given in the question? Anshul is an Indian citizen. He is working in ABC India Limited and he used to travel frequently out of India for his office work, and he left India on 5th of October and returned only on 2nd of April. So that means he left on 5th of October for the rest of the previous year. So he is in India from 1st April 2023 to 5th of October 2023. The date of departure will need to be included. And when we count the period from 1st of April to 5th of October, it will be what? 188 days. So it will be 182 days or more. Now, if you look at the 182-day rule or 60-day rule, 182-day rule will become applicable. And since he is 182 days or more in the previous year in India, he will be a resident. But to further determine his status of ROR or RNOR, we will need to find out the information for the preceding 10 years or preceding 7 previous years, and this is what is not given in the question. So therefore the correct answer will be he is a resident but can't determine whether he is ROR or RNOR. Okay. Next, what are his taxable perquisites? So correct answer is 105400. How has this been arrived at? So if you look at the perquisites, if you identify the perquisites, this is one reimbursement of medical bill for his mother, so 15,000. Okay. Then E, he was reimbursed salary of house servant 4,000 per month, so this comes to 48,000. Professional tax paid by the employer while a deduction is given from the gross salary income under section 16, but first it needs to be added in the salary income as perquisite. So this will be added. And then ESOP, 400 equity shares allotted at the rate of 250 per share against fair market value of 350. So 350 minus 250 is 100 per share and into 400 shares. So this becomes a perquisite. So if we add all these up, 15,000 plus 48,000 plus 2,400 plus 40,000 for ESOP. So this comes to 105400. So this is the correct answer. Okay. The last one on this is what is the income chargeable under the head salaries in the hands of Mr. Anshul. So if we compute the income here, so basic salary is 58,000 per month, which becomes 6,96,000. Okay, DA is 10% of basic pay, which means 69,600. Then we add bonus 98,000. We add medical allowance of 60,000. Medical bill reimbursement of 15,000. House servant salary of 48,000. Professional tax 2,400. ESOP 40,000. So then we get the gross salary, and from this we deduct two items. One is 2,400, which is on account of professional tax, and the other is 50,000 on account of standard deduction. So the answer that we will get after this calculation will be 976600. This will be the correct answer. Okay. Number 3, Mr. Ross is an Australian citizen, blah blah blah, and the question is which of the following statements are correct, and the A is the correct answer. Salary allowances and perquisites received outside India are not taxable in the hands of Mr. Ross since he is a non-resident. So the question is, Mr. Ross is an Australian citizen. He is employed in the Indian Embassy in Australia. He is a non-resident in India and he receives salary allowances from the government of India for services rendered by him in Australia. Okay, in addition, he was allowed perquisites by the government. So whether this is taxable or not, and the correct answer is that this is not taxable. Why? Let's see. So in the case of non-resident, income will be taxable in India if either it accrues or arises in India, number one, or two, it is received in India, or three, it is deemed to accrue or arise in India. Okay. Now in this case, he received uh, the allowances. He received the income in Australia, so receipt is not in India. Number two, whether this is accrued or whether this accrues or arises in India. No, because the services have been rendered by him in Australia, so therefore accrual is also outside India. So the final thing that we need to check is whether this salary can be said to be deemed to accrue or arise in India. Okay. Now, if we look at the provisions, salary payable for services rendered outside India is deemed to accrue or arise in India when it is paid by the government to a citizen of India. If this is not the case, then deemed provision do not apply. Okay. Now, so while the salary has been paid by the government, but Mr. Ross is not an Indian citizen, he is an Australian citizen, so salary will not be deemed to accrue or arise in India. Consequently, it will not be taxable in India. Okay. The last one is, which of the following returns can be revised? A return of income filed under 139(1), that is a regular return of income, a belated return of income, or a return of loss. And the correct answer is I, 2I, and 3I. Basically, all of these can be revised. So, if you look at the return chapter, type of return and can it be revised under section 139(5). So, regular return, yes, can be revised. Return of loss, yes, can be revised. If it was filed within the time allowed under 139(1), belated return, yes, it can be revised. So the position is very clear. All these kinds of returns can be revised. So this brings us to the end of income tax, and now we will move to GST portion. So GST MCQ, Messrs. Mahi and Company is a LLP, registered dealer under GST. And we straight away move to the first one. Choose the correct statements, and the correct answer is C, I, and IV. I is for GTA services, government is liable to pay GST under reverse charge, and IV is for DSA services, Mahi and Company is liable to pay GST under forward charge. So we are talking about GTA services and DSA services. So what is the question saying? So as far as GTA services are concerned, it provided GTA services to government department registered under GST for providing various services. So the government department is registered under GST for providing various services. Mahi and Company did not exercise the option to pay GST under forward charge. Okay. So if we look at the position, so this is the chapter on reverse charge and GTA services, supply of services by a GTA to a specified recipient is covered under RCM mechanism, and the specified recipient includes number 4 also, registered person, registered under GST. And in our question it says that the government department is registered under GST. So this condition is fulfilled. Okay, so apparently it appears that RCM provisions will apply and the government will need to pay tax under RCM. But RCM, we need to check this as well. RCM does not apply where the GTA has taken registration under GST and exercised the option to pay tax on such services under forward charge. We saw in the question it is specifically written that Mahi and Company has not exercised this option. Okay, so this becomes irrelevant. But there is another point that needs to be checked where the recipient is the government. RCM does not apply where the services are provided by GTA to the department of the government, which is our case, which has taken registration under CGST Act only for the purpose of deducting tax under Section 51 and not for making a taxable supply of goods or services. Is this the situation? No, because the question says that the government department is registered under GST not only for the purpose of deducting TDS but for providing various services. Okay. So none of the conditions for non-applicability of RCM are satisfied. So therefore RCM will apply and consequently government will need to pay tax under RCM. So this becomes the correct one. For GTA services, government is liable to pay GST under reverse charge. What about DSA? The question says the firm provides services of DSA to a banking company located in Mumbai. So Mahi and Company is a LLP. So LLP is providing DSA services to a bank. Let's see. So DSA, okay, services supplied by a DSA, individual DSA to a bank is covered under RCM. Okay, the supplier should not be a body corporate partnership or LLP. In our case, Mahi and Company is a LLP, so RCM will not apply, which means that Mahi and Company is liable to pay GST under forward charge. So consequently, C becomes the correct option. Clear? Number two, which of the following options is correct in respect of GTA services provided by government department? And the correct answer is GTA service is taxable at 5%, but ITC cannot be availed for the same. So what will be the position? We saw that RCM is applicable in the case of GTA services. And what does the provision say? That if RCM is applicable, then tax is payable by the specified recipient. That means government department in a case under RCM at the rate of 5%. And GTA cannot avail ITC. And the GTA cannot avail ITC. And the reason is simple, that tax is payable under RCM at only 5% and therefore ITC cannot be claimed. However, if it was the case of Mahi and Company paying tax under forward charge, then a higher rate would apply of 12% and consequently Mahi and Company would be eligible to claim ITC. But in our case, it will be tax at the rate of 5% without ITC being claimed by Mahi and Company. So therefore, D becomes the correct option. Next one, gift of 50,000 in value provided by Mahi and Company to each of its employee will be what? Will not be a supply. This is the correct one. So what does the question say? The firm provided free gift to each of its employees valuing 50,000 once in a financial year. Once in a financial year. Okay. So this is the case of gift. So there is no consideration and hence we need to check whether para 2 of schedule 1 applies, which is supply between related persons. Supply of goods and or services without consideration. This is our case between related person and related person, employer and employee are deemed to be related persons. So this is the case of transaction between related persons made in the course or furtherance of business. It is treated as supply. However, gift up to 50,000 in value in a financial year by an employer to an employee is not treated as supply. So 50,000 gift is provided in a financial year to each of the employees and therefore this will not be treated as supply. Okay, so D will be the correct answer. Next one, which of the following statements is correct? And the correct answer is D, second and third. So second is what? Catering services and to Vishesh Anganwadi is exempt, and fourth, second and third. And the third is letting out of warehouse to Shankar is not exempt. So what does the question say? Okay. So this is regarding warehouse. Mahi and Company let out its warehouse to Mr. Shankar, who in turn let out to an agriculturalist for warehousing of agricultural produce. Now, warehousing services, warehousing of agricultural produce is exempt as per the provisions, but here the services is not of warehousing but of Mahi and Company has let out its warehouse. So this will per se not be exempt. Okay, this will not be exempt. GST will apply. Regarding catering service, the firm also undertakes catering services to Vishwas Anganwadi. The said Anganwadi has received fundings from the government. So Anganwadi receiving funding from the government in catering services has been provided. And if we look at the exemption provisions, this is regarding education, entry 66, and services provided to an educational institution. Okay, catering, including any midday meals, is sponsored by the central government, state government, or union territory. Okay, so funding is by the government. So what is the question? If you look at the question, the firm undertakes catering services to Anganwadi and Anganwadi has received fundings from the government. So the case is covered in this particular item. Catering, including any midday meals, is sponsored by the government, but this is exempt only in case of a preschool. Only in case of a preschool, not in case of other educational institutions. So we are talking about the case of Anganwadi. So regarding Anganwadi, we need to note that since they provide preschool non-formal education, they are covered as an educational institution, preschool, and therefore consequently the position is that, what is the position? Okay, there is another point also, catering including midday meals. It is exempt irrespective of its funding from the government, grants or corporate donations. So anyway, we saw that this is exempt. So the answer to this will be that second item. We saw catering is exempt, but letting out of warehouse is not exempt. So D becomes the correct answer. Next one. Messrs. Mahi and company is eligible to claim ITC of nil. No ITC. Okay. If we look at the question, there are these two items of purchases during the month of July. Capital goods amounting to 45,000 purchased on which depreciation has been taken on full value including GST paid thereon. So since we know that if depreciation is claimed on GST component, ITC cannot be claimed. Second, raw material purchased for which invoice is missing but delivery challan is available. So invoice is the required document and invoice is missing. So ITC cannot be claimed even if delivery challan is available. Okay. So consequently, the correct answer will be no ITC is available. Next, compute the GST liability of the firm for the month of July to be paid in cash. If Rule 86B is not applicable, what is 86B? You would remember that at the most 99% tax can be paid using ITC, but 1% needs to be paid in cash. So this is not applicable. So we need to basically compute the GST liability for the month of July to be paid in cash. And the correct answer is this, and we will see how this answer has been arrived at. So some information is given in this question that for the month of July, GST liability was 20,000 IGST, 10,000 CGST, 10,000 SGST, and these are the credits that are available in the said month. So we plot these this output tax liability here: IGST 20,000, CGST 10,000, SGST 10,000, and this is what is the credit which is given as the balance. So IGST is 8,000. So as a step 1, we adjust IGST against the IGST liability of 8,000, which brings us to 12,000 as the IGST balance. Then we come to CGST, which is 12,000. So first we adjust 10,000 against 10,000 CGST and the balance 2,000 against IGST, with the result that CGST goes off and IGST balance comes to 10,000. Lastly, SGST is 5,000. So we adjust SGST 5,000 against SGST of 10,000. So in all, the balance comes to 10,000 IGST and 5,000 SGST. So this is what is the answer: 10,000 IGST, CGST nil, and SGST 5,000. Clear? Next question: Kids Bazaar Limited registered in Maharashtra. This, and the question is: determine the value of supply on which champ.com should collect TCS from Kids Bazaar Private Limited. And the correct answer is 40,000. Okay, so for the purpose of TCS, what should be the value of supply on which TCS should be collected? So basically, Kids Bazaar Private Limited is the seller and champ.com is the e-commerce operator, and Mr. Dhruv has placed an order for 10 sets costing 5,000 each excluding GST, and on 20th January, however, he returned 2 sets back after 2 days. That means on 22nd January, and then we need to determine the value of supply. So if we look at the TCS provisions, TCS is to be collected by e-commerce operator on the net value of taxable supplies made through it by other suppliers. Okay, this. So net value of taxable supply is what? Aggregate value of taxable supplies made during any month through the e-commerce operator minus the aggregate value of taxable supplies returned to the supplier during the said month. So in our case, 10 sets are being sold in January and 2 sets are getting returned in the same month. So 10 minus 2 is 8. 8 into 5 is 40,000. So 40,000 becomes the value of supply on which TCS will need to be applied. Okay. The last one on GST is Ms. Gyati, a jeweler registered under GST in Mumbai, wants to sell her jewelry in a trade expo held in Delhi. Which of the following statements is false? And the correct answer is C. So we need to see what are the various options. So option A is she needs to get registration in Delhi as a casual taxable person. So this is correct. Why? Because if you look at the definition of casual taxable person, means a person who occasionally undertakes transactions involving supply of goods in the course of furtherance of business in a state or UT where he has no fixed place of business. So our question covers this definition, and therefore she is a casual taxable person. She is a casual taxable person and she needs to get registration in Delhi. Why? Because we know the provision compulsory registration. A casual taxable person making taxable supply is required to be registered compulsorily where in the state or UT from where he wishes to make taxable supply, which is Delhi in our case. So A is basically the correct statement. Okay. B, she needs to pay advance tax on estimated tax liability. This is also correct because for casual taxable person, we know that there is a provision for advance deposit of tax. So this needs to be done. Uh, D. D is also correct because she needs to file GSTR 1 or IFF and GSTR 3B for Delhi GSTIN when she gets registered in Delhi, and this is correct because when we have studied the provisions of return, we know that GSTR 1 provisions and GSTR 3B apply to casual taxable person as well. But C is not correct, which says that she needs to mandatorily have a place of business in Delhi. No, she does not need to have a place of business because the definition itself of CTP says that the person has no fixed place of business, where the person wants to occasionally undertake the transaction of supply. So this is not really necessary for a casual taxable person. So the correct option becomes option C, and this brings us to the end of GST as well, and therefore to the end of this video. If you have any doubt, any question whatsoever, just write to me in the comment box and I will reply to you as soon as possible. Subscribe to my channel so that you continue to receive such important videos which will be really useful for you in preparation of exams. And if you found this video useful, do like this video and share it with your friends and colleagues. See you very soon in my next video. Thank you very much. Goodbye. Good luck.